Welcome to Economic Review, February 5th, 2026. This is your professional and steady deep dive into today's structural market movements. Before we begin, please note that this is for educational reporting only and is not financial advice. This follows a high volatility cycle where the market tested a peak of $5,020 before settling during this rebalancing phase. Now, let's examine the key macro metrics, which currently show a diverging trend directly impacting market sentiment. The dollar index is positioned at 97.78. Notably, the U.S. 10-year Treasury yield recorded its largest one-day decline in months, falling to 4.209%. This sharp drop occurred alongside a report showing private payroll growth of only 22,000, a figure well below market expectations, adding to recessionary fears. The primary driver of current sentiment involves institutional policy rhetoric. Governor Lisa Cook has emphasized a focus on inflation risks over labor market signs. This, combined with the nomination of Kevin Warsh, has led to a reevaluation of the long-term policy path by major investment houses. Moving to technical analysis, we are reviewing the momentum indicators and the underlying market structure. Checking core oscillators, the relative strength index has now moved to a neutral 48. This indicates a complete reset of the previous high-velocity momentum. The market is now testing the middle boundaries of the Bollinger Bands as it actively searches for a stable base before the next major move. Technical data identifies a pivotal level at $4,850. Immediate support is observed at $4,805 and $4,745, while resistance is established at $4,955 and $5,030. Finally, we analyze the impact of global and geopolitical news on capital flows and supply chain dynamics. In industry news, Barrick has announced an IPO for its North American gold assets, a move to maximize shareholder value and restructure its portfolio. Simultaneously, the U.S.-India trade accord has adjusted import structures to 18%, a decision expected to shift physical demand patterns across the Asian sector. Geopolitical data indicates a significant rotation of capital. BRICS nations have adjusted $61 billion of their holdings into physical bullion, providing foundational support. In summary, February 5, 2026 has been defined by a clash of fundamental data, geopolitical maneuvers, and structural policy shifts. We've covered the macro shock, the policy rhetoric, the technical reset of the RSI, and the major geopolitical capital flows. Thank you for viewing this educational case study. Don't forget to subscribe for our daily reports and stay ahead of the curve.